do not disturb. Do not disturb me for a while. I'm going to ignore my friend's what are we crying for? I'll put something here. Want this? Okay, come on. Put you right here. There we go. Come on. Okay. Do you want to come in? You can stay right there. I am not bringing you in here. No. Sorry, the dogs are... Hit the thumbs up button. The dogs are going a little nuts. We got the do not disturb on. I'll open up the podcast. Do trash. We're going to trash that. If you didn't know, I did a short yesterday on Verizon and AT&T, and they look good. We're going to open up our Active Trader Pro. I forgot to do that. But one thing that I will say is TrendSpider, this update for Strategy Tester. If you don't know, Strategy Tester is where I've got my algorithm, and it's unbelievable. So I apologize for that. Hey, you're getting locked out of here. You're getting locked out of here. Hey. Hey, Emmett. Sorry about the dogs barking. Hey, Penny. Okay. You two just sit down and relax. Relax. I'm starting up Active Trader Pro so we can look at how much Boyle's losing today. Relax. Daisy. I love you. Hey. Get over here. I'm going to have to probably get up. TrendSpider, TrendSpider's where I show you all my charts. Go to TrendSpider University. Here, if you're on YouTube, just go here to TrendSpider and go to their playlists and look at TrendSpider University. Look at how to use TrendSpider. They've got full playlists on what to do. Sign up with the link below any of my videos or in my link tree, and I'll give you access to my algorithm, Emmett. What it gives you, if you look right here, here's my algorithm. And this is AT&T. So what it does for me is I am able to use my algorithm to base my entries and exits. So you see right here, for instance, on let me hold on one second. Do run. My dates weren't showing up, but October 14th, right here, entrance at 15.19. And it's got, once it gets above that 9-day, I say, okay, it's trading above the Bollinger Bands. It's on a 4-hour chart. Hey, I think I'd like to get in here. Same thing as I saw yesterday, this December 27th, 1825 check mark here, entry after this 20% gain, plus this gap. I mean, do I want to invest in it? It just seems like right before the ex-dividend date, perfect timing to do it. So I made a video about it yesterday. What can it do for you as well? You go into the market scanner and you can scan different lists. I'll give you the access to the daily stock pick core portfolio. And I've got, let's see, daily stock pick core portfolio, low cost Vanguard ETFs, which it scans, spider sectors, which it scans, and you can look at those 3 kind of lists. I'll have more lists coming up in the new year. Morning, Bill, my favorite groundskeeper. And that's what it does for you. Right now, let's see, plans and pricing. Emmett, you've been listening to me for a while, and you lost out because right now it is, 40% off at $468. You could have gotten it for $320 for the year if you'd just listened to me. Guys, here's what you have to know. I do get a commission on this one, but as you know, I'm not steering you into 100 different things. Let me show you, for instance, a guy that is steering you in the direction and does the same thing that I do. We'll go back here to, I don't want to show that one. This one. Hey, Dan Fitzpatrick here, Stock Market Mentor. Take a look. Join my free chart of the day, videos, blah, blah, blah. Join my course. Here's all of his stuff. I mean, I'm not dinging them on this one. Your first 7 days are only $7. I'm not charging you for this stuff. I'm giving you, if you sign up for TrendSpider, I do get a commission. But I'm giving you the tools where you don't have to pay somebody to do this stuff for you. You can figure this out yourself. The gift of education is way better than a gift of, hey, here's a stock price where I think it's going to go up. Rule number 1, do not listen to a douche on the internet giving you stock tips. Do your own research. So that's rule number 1. Sorry. But, yeah. Close. Let's look at Boyle. By the way, the market got tanked when ADP came out. And Boyle is crashing again. KOLD is going to be way, way up. And James, if James is on or James watches this, you were wrong. You were wrong about Boyle, boy. I hope you didn't take that trade because we were looking at it yesterday, and at some point Boyle's got to bounce. But here, let's go over to Active Trader Pro. See, there's Boyle. Live view of Boyle. If we go back to Safari view, Boyle just has no confirmation. I mean, there's no way I would say, hey, it's got a button hook right now. You got all these gaps up here. But you look at the long term, I think we went weekly when we drew that line. And we went way back. Here. Let's draw it again. I'll do it. Here, if we go, and this is our center line here, okay? We're touching 3 points. And let's assume that that's just the bottom. We're going to touch 3 points. We're going to do 3 points. That was outside the range. So we're just assuming that that's outside the range. We're only in the middle of the downfall for Boyle. So, yeah, I mean, I agree with you. I think energy is going to be good. But yeah, look at Boyle. I mean, here, I don't know how much more I could tell you that you don't kind of, just buy and hope. This is kind of obvious that KOLD is going to look at the volume kind of spike on that. Let's go and look at KOLD, because I bet we'll be looking at a similar. Let's go to the weekly. You still got to move down. But let's take a look at. We're going to have to drag this down a little bit. See that Bollinger Band it expands way down. Yeah, I'd even be careful of KOLD, because this is a weekly, and say we, go back here, and we're gonna touch the top side. So let's start here, and we're gonna go down here, and then we're gonna say we're gonna touch 2 more. Okay? That tells me that KOLD, if it is going to continue moving, is going to go outside of this range. So KOLD and Boyle, I would probably just assume stay out of these two, just because I think natural gas has got to come down. You can short Boyle with KOLD. It's just an inverse, but stop. Oh, hey, there is, penny. No. It's just some garbage cans that are moving. Sorry. Yeah. Let's look at Oxy, because I own Oxy too. I own Oxy, and I will tell you my exact buy-in on Oxy, because I am probably close to losing money, if not losing money. I think I may be losing money, because I bought kind of on the way up. I didn't do a great job. I still don't own 100% of what I want to own in Oxy. And I didn't do a great job of actually buying this one. So let's see where I'm at on Oxy. All positions. We'll go down to Oxy. Tax lots. My average purchase price. Let's see. Current value, today's gain loss. Total gain loss, I'm down 2.86%. So my average cost is $62. So let's take a look at Oxy. And I didn't listen to my algorithm. And I, honest to God, in my mind, I think energy is just a long-term play. And while Oxy is expensive, gas is at $70. These guys are giving you, what's the dividend? 3 point something? 0.85. So it's not a great dividend. But it was 1 year, 96% up, because it was down in the 30s at this point last year. Year to date, down almost 3%. They're 20% below their 52-week high of 77, which I think, again, when energy starts soaring again, you're going to see it there. I don't fight Buffett. And as long as Buffett's holding, and I don't know if I can show that, if this shows up, it doesn't. The insiders, the last insider, here, I can show it on here. Insider trading. The last buy was September 28th. I have some others on TrendSpider. October 3rd, there were awards, but the last buy-in was September 28th from Berkshire. So these are 10% owners. But look at the value. Average cost $60. If Buffett's buying at $60 and putting in millions and hundreds of millions of dollars, why do I think it's crazy to put in at $60? Could it be a bad trade? It could. Here, November, upgrade, Wells Fargo, $74 price target. I'll take a decent dividend, maybe a special dividend. You passed your ex-dividend date, and that's, it's kind of going down. Your next earnings is February 24th. Your Devon Energy is at 58. It's kind of same thing. Just kind of hit the ex-dividend date and goes down. You'd be out of it right now. It got you out with a couple of losses here on the way down. But it's expensive. I mean, here, Oxy is at 5 PE. Devon, these are what's called values. It's 6, but it's got an 8.78% dividend. I think you've got some opportunity here. So, okay, we're going to do scans. I got to do my scans. And this is the other thing that Emmett TrendSpider gets you, the scans. So I pull up the daily stock pick scanner. I look at the daily stock pick core investments, see if anything crossed up. The scanner's based on my algorithm as well, so entries. So it gets me to look at which ones crossed up. I'm not. My point on the price of TrendSpider here at 468 is not that it's super expensive. It's that you could have gotten it for $150 cheaper, a month ago. The value in it is not necessarily the price that you pay. The value in it is you get a year of actually using this software. Morning, Brittany bitch. I love it. Oh, and by the way, I'll bring it up on the podcast too. So one listener switched over to Fidelity. He sent me his email address. I sent it over to my guy at Fidelity. And he said, hey, as long as it's already set up, I can't do much for them. So if you do want to switch to Fidelity, send me your email address and phone number, and I'll have Stuart's folks kind of reach out to you. That might be a better one, but since it was already set up, Stuart is sending in the mail to the subscriber and me gift cards. So if you want to switch over to Fidelity, just let me know. We'll figure out a good process for it. Switching a broker is a big undertaking. And I know Barbara, who's a regular, had a problem with Fidelity. I will tell you, if you get with Stuart, you probably won't have a problem. He'll take care of you. He's good like that. Okay, nothing in the core investments. Let's see if anything on the Vanguard low-cost ETFs. These are ones you just buy. So I look at them to try and find entries. So now I'm looking at the spider sectors. You can, Brandon, you can have it automatically attached to your broker and buy and sell. I don't think that they have it set up with Fidelity, but I know they've got E-Trade, TD Ameritrade, and others. It's what's called a trading bot. And you do pay additional for that service. I don't know the pricing around it, but you can. Dan, the CEO, is famous on Twitter for this. When he was developing the bots and the bot program, he was testing it out and having it going crazy. It was interesting. I think he made a lot of money on his strategy. And in fact, if you watch the video, this one, if you watch this video, it's brand new. Trade management update for strategy tester. He shows you his algorithm that he uses that actually seems pretty good, and you can customize it. Again, my algorithm's pretty simple. It's not hard. Once you have it set up, it just makes me kind of, feel better about getting into a position that I know works. But yeah, you can have it, the trading bot, do everything for you. And wow, I'm totally Apple, by the way, is up. How is Apple up? QCLN, which had the cross up 3% in pre-market. So crazy stuff. And I think tomorrow what I'll probably do is look at some we'll recap. I think I'm going to start a new format where on Fridays I just recap some of the scans that we went over, how they played out, things of that sort. Brandon, I will tell you, I am highly skeptical of any bot. And the reason I'm highly skeptical of any bot is, and I think Dan is skeptical of them too. He has them because I think some people believe that they can, they've got a full-time job and they can't do it, blah, 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 the whole thing. So I think he believes in it in some instances. Just be very careful because, for instance, and this is just an example, say you've got an algorithm that's based on a MACD strategy that has some moving averages and has some RSI in there, has some Bollinger Bands and percentage off the 52-week high kind of thing, blah, blah, blah. So you've got a bunch of stuff in there. And then, for instance, there's an earnings announcement like there was in Facebook where it goes down like 20%. Say that happens. You're getting out of those positions. You're stuck with those tax, either losses, gains, or anything of that sort. I will tell you that tax optimization does not work well with bots, just because you've got to plan out your stuff. And that's exactly what he did. Here, let's go over to Twitter. I'll show you, because if you go to Dan's Twitter feed, Dan Ushman is his name. Great guy. I actually like his tweets. The guy's he tweets all day long. This is him. So if you go back, Signal Stack, I think, is what their bot program is called. But if you go back here, let me see, maybe Signal Stack has. Interactive Brokers, they just launched. Yeah. I should follow that. Yeah, Signal Stack is probably a good one. I should probably follow it. I am following that one. But yeah, if you want to look it up, Brandon, that's what they have. I don't find value in it. I'll just kind of leave it there. I also am not a day trader. I'm also a person that doesn't listen to my own algorithm, if you will. And it's not that I'm if I were to, I would lose sleep over a bot. Let's just kind of put it that way. Wow, and there was nothing in the ARC funds that crossed up. But yeah, I would, trading for me if I'm losing sleep is not fun. McDonald's crossed up. That's surprising. And it's not a secondary cross up. It's using that 200 day. I think I went over that one before. Let's look at Dow 30. We're going to look at the NASDAQ 100. I got to get a new chair. And I want to buy a library card, and I get fat shamed by my phone. I got a lot of issues. Walgreens Boots. This is an interesting one. This was one of the worst performing stocks of the market last year. It should have been up. It was poorly run. I don't think it's poorly run anymore. That's an interesting one. This is one that's not making money. AVGO. Broadcom's a great company. God, I'm going to bring that up. Great company above the 200-day, but God, here, let's sneak peek. No. We'll go to strategy tester for this one. Look at this run on Broadcom. 436. You're at 560. Nice run on that one. Your average win is 5% on Broadcom. You win 40% of the time. The dangers of Broadcom is you got these gaps down here, but it's above the 200-day. See, it's essentially those Bollinger Bands are cinching up. I think it's still pretty expensive. You're paying for it. Yeah, 21 PE, but you got a 3.28% dividend. It's still 16% below its 52-week high. So you still got 600 in the bag there. Let's see. Where is the 52-week high? It's way back here in January. No, November of 2011, which means it was all January. January of last year is where it was at its 50, which means that's where the market was at its high. This is where the market's not quite as high, but it's still expensive. Okay, let's go back to Market Scanner. We did the NASDAQ 100. We're going to go to the S&P 100. I don't do the 500. I just do the 100. Nothing that I haven't seen there. Let's go to energy. And let's see. I don't think anything crossed up in energy, but anything worthwhile, I should say. Damn it. There ain't no big dollars. Big dollars, small dollars in trading doesn't matter. It's your percentage. Don't think of it like that. It's the percentage. Whether I throw, if I throw $50,000 into a trade and I make 10% at 5,000 and you do 500 and you make 50, same percentage, same gain, should make you feel just as good. Sometimes when you get up into bigger trades, you tend to look at the dollar amount. I try and look at the percentage rather than the dollar amount. Not that, the dollar amount isn't important. It's just the dollar amount is the dollar amount. It's not important what the dollar is unless you have a certain goal of, say, when I first started day trading, my goal was $1,000 a day, and I was able to make that. And I was able to make it a couple of trades, 2-3 days. But that's 2020, which was just crazy. It was like shooting fish in a barrel. It was nice and easy. By the way, I still have Tesla in the Daily Stock Picks core portfolio because I do think that it's a piece of a core portfolio. But full disclosure, I'm out of it. I don't own it right now. I don't want to own it right now. I'm waiting for some type of turnaround on it. And we're done with our scans because the strategy tester is done. But here's Tesla. It had that entry at 119, and you're still in it, according to the algorithm. The earnings are coming up. Here's my thing. There's additional downside on it today that the China deliveries were down year over year, and that they're not doing as well. It's on the downside of the Bollinger Bands, on the downside of the 9-day. The death cross here was clearly a signal when, at 224, there was something, when that death cross kind of happened. You still have gaps up here, and you still have gaps around 250. You'll hit that. Yeah, government taxes are, God, Jim Cramer interacting yesterday with the Today hosts. Yeah. Ugh. Douches. Okay, I got 3 stocks on the scans list that I like. I do want to do, I should do my, let's do SQQQ. SQQQ will be up big today, I think. See, and here's, it is what's interesting. Some of the stuff that Dan was going over in this video, trade management update for, I could probably use for some of the short ETF strategies that I have, like this SQQQ. What's interesting about SQQQ is, you can see we got the MACD crossing down pretty freaking hard right there. Now you got the bad news of a pretty strong job market, which is going to bring SQQQ up, and that MACD is going to kind of change. But I don't think that's a bad. I mean, here you haven't fully covered this gap. You've got a gap below here between 50 and 51, but you haven't covered this gap that goes up to 59.16, and you've got this gap. Well, that gap was covered. That one was covered. But yeah, this gap was semi-covered, but not completely. And my guess is, with the market going the way that it is, tell me a good thing in the market. There's not a lot. I'll tell you what's good. This one's just been beaten down too much. Just too much. Beaten down too much. This was your buy-in at 47.77. You're at 48.46. So it's not crazy to think that you should buy it at 48.46. Let's look at the Active Trader Pro. But God, look at Boyle continues to just sink. QCLN. SOXS is going to go down, up, because shit's just hitting the fan. The bond rates essentially are soaring. In fact, let me do this. I'm going to go into my Fidelity account. Yeah, you can't see this. I'm not going to show you folks this. Let's see. I'm going into, if you have Fidelity, you can follow along in your own account. Go to News and Researched, Fixed Income Bonds and CDs. Okay, since I'm in there. This is the showing for this. So U.S. Treasuries. This was crazy. This U.S. Treasury 6-month was at 4.6 a couple of days ago. Crazy. It's a U.S. Treasury. You're going to get, so you click in there. It's at 4.8. So here, you take this. The maturity date is in July. Your yield to worst, the worst you're going to do is 4.8%. That's the worst you're going to do. Okay, hold on. I'm going to do this.
It's 12,000.
Wow. If I put some of the cash that I've got left over between now and July, I could make $12,000. Banks are funny. In fact, I made this note yesterday. The Wells Fargo Mike. Oh, let me look up his name. Wells Fargo bank analyst Mike Mayo. Here it is. No, this isn't the story from yesterday. But Mike Mayo, let me see. Mike Mayo from Wells Fargo Bank of America. He's been bullish for a month. 2 hours ago. Breaks down his case. This video right here. I'll put this in the chat. Copy link. Let me get my chat doc up. There, Mike Mayo makes his case for. I'm gonna put that. Yeah, let me put this over here. No. Mike Mayo makes his case for Wells Fargo or Bank of America being the stock of the year for him. So, and I've said Bank of America. It was part of why I bought Wells Fargo, Brandon. I think Bank of America was actually a better play, to be honest with you. I was trying to decide between the two, and honest to God, you should have bought, Bank of America. But here, I bought it $40.50. So I'm up, what? Let me see. It just opened up. Wells Fargo. I'm up 5%. So not a bad play. But I think you've got more to go. With interest rates going up, I think you're fine. With Mike Mayo saying, watch that video. He says Bank of America is a good one. I've got it in my notes here. He says Bank of America is his top pick because it could surge 50% over the next few years. And I'm a big believer in that as well. I mean, these guys are, paying next to nothing for their cash deposits. Bank of America, I think they're still paying around one point something, 1.3 or something in their savings accounts. So, new replies to my Q&A. I gotta look at that. Where did I get new replies? Because I need to see. Did somebody ask me something? Community. See replies, 0 replies. Sometimes people reply in. See replies, no replies. But it always comes up like late. But I've got one episode that's doing really crazy well. 0 replies. Optimize your taxes. See replies. Huh. Boy, There's some great. I'm gonna pin these. Reply pinned. In the episode, optimize your taxes. It's like a 20% trade. 2 people said they really got good stuff out of that. It's awesome. Thank you. Thank you so much. Yeah. Look at McDonald's. I mean, McDonald's just launched their first optimized zero human interaction store in Texas. I think it was Houston or something. You're going to get stuff like that. I mean, what's the biggest cost for businesses? It's employment. And if they can cut it out. I am self-employed, so I get that 1099 check from my employer every year. And what's the first thing I have to do is I have to pay the 12% that normal employers pay for your portion of Social Security and Medicare. So I got to pay the 12% out there. And then, on top of that, that's usually what employers pay. Then I got to pay the additional 12% that you would normally pay. So you see it in your checks. I see it on both sides as a self-employed person. So it's a little crazy. Okay, let me start the podcast. Okay. I got a Tesla update as well. Good morning. It's Thursday, January 5th. And thank you for everyone who's replying on, I think it's Spotify that they reply on. It automatically includes what you think of this episode. And I got 2 replies this morning as a thank you. So I just wanted to say thank you for that one. I appreciate when you guys interact with me like we've been doing on YouTube Live all morning. It's 9:34. The market's opened up down. Essentially what happened was the ADP jobs report came out at about 8:30. It was expected to see an increase of 153,000 jobs. Well, we saw 253,000 jobs. Completely unexpected. And then a CNBC interview by Steve Leisman with a Fed president who's retiring. I think the Kansas City Fed, or I'm not sure exactly. But she said, yeah, we're going to have to stay tighter for longer. And what tighter for longer means is that they will raise it up to 5.4, I think is the percentage that they're expecting right now. And it will stay there for quite a while. And if you stay at 5.4%, then you're essentially killing the market because the market's like, well, when are you going to actually reduce rates? So that news didn't hit the market well. We kind of went down. I would expect a bounce back of the market just because I do think that there's some type of optimism in the market that something good is going to happen. Talking about it with some folks on YouTube this morning, I agree. I think energy is probably a good play, but I will tell you, Boyle is not your play. And I went over this with folks on the on YouTube Live. KOLD is still your play, but I will tell you it's getting close to a very high top, and there are a lot of gaps below this. At some point in time, Boyle comes into play, but I think Boyle moves more down towards the $5 and $6 range than it does up to the $20 range. Right now, you're trading at $13.23. You're at pretty much the lows, but you've got these gaps up above. Doesn't mean that this one's going to go up and automatically fill those gaps. Remember, these are decaying assets. So the reality of this ETF is that it will decay in value over time. It won't go up. It doesn't own anything. It just tracks the natural gas futures. So it doesn't, even KOLD, even though it's going up in value right now, it's not actual value. It's just the price is going up. So you want to be careful in these. I wouldn't touch either one of them right now, to be honest with you. I think it's just KOLD is so overbought, I mean. And Boyle is just so oversold. Wait for the first 10%. And then when you get in a bull market on one of them, wait for the next, buy in and get the next 10%. So I would caution you against, though. I did a video yesterday where I thought Verizon and AT&T, if you want to watch it, go to my YouTube channel. You can see a short. You can see, I think it's like 2 minutes long. It's not long, but I go over the charts. Verizon, I still think that Verizon has probably 10% in it. You've missed the first 10% from 37 to 40. I went over this on December 22nd, that it was just too low, that it had a great dividend. Let's see I think it's like 6% or 7%. It is 6.35% is the dividend in Verizon. So you've got your ex-dividend date coming up January 9th, next week. You'll get, 6% divided by 4, because it's a quarterly dividend. You'll get, just under 2%, for just holding it. Great. And I went over this with Fidelity. I went into their U.S. Treasury bond 6 month. The worst, the yield to worst that you will get from buying a bond now until July 6th, 2023. I have it up on my screen if you want to go to YouTube. We're at the 46-minute mark. Yield to worst is the key point. United States Treasury bill, 0 coupon, 4.8% is the yield to worst that you will get. So if you want 4.8% and you don't think you're going to touch that money, or you could touch the money, you could just sell it if it actually goes up in value closer to the time, which it most likely will. It won't go up in value. If you're having to sell it before its maturity date, you won't lose money. You just might make 2% instead of 4.8%. But as rates continue to go up, that's what you're going to get. So again, Verizon, look at that story that I did, the video. It's up above its 200-day on the 4-hour on the algorithm, which told us, but it's not above its 200-day on the daily. It's probably going to the 200-day, which is $44, and you're at $41 right now. But grab the dividend. You've got your earnings coming up. I can't imagine that earnings are going to be spectacular, but if they start taking some share away from T-Mobile and their visible portion starts, guys, if you pay more than $30 a line for your phone service, you're out of your freaking mind. Go to my link tree and sign up for visible service through me. You get $20, I get $20. And it's a great service. I haven't had a problem yet. It's the same service as Verizon. Honest to God, I've switched over probably 30 people. And none of them have said they've had a problem. Switching your phone service is so easy. You just call, or text or communicate or chat with your current phone provider, get a PIN number, you put it into the visible service. And if you want a phone, I think they're giving $300 off new phones, which is better than most. And you don't have to trade your phone in. You sell your phone on the secondary market. You get more than the trade-in that Verizon and those guys are doing. So again, kind of look at your cost. I think that's the next thing that we're going to go over on the Fire podcast is cost. But AT&T is in the same situation as Verizon. Let's look at Verizon on Active Trader Pro real quick. Verizon service today. Let me see. Where's Verizon? It's flat. Opened up at 41.13. It's at 41.13. It's flat. Yesterday it went up to 41. Today it went up to 41.25 at open. It's kind of moving down now. Closer to 40 is a better buy, but I don't think you're not going to mind buying this at 40. People need phone service. They're not disconnecting phone service. The problem is that their margins are going to get hurt, and that's it. So Verizon, AT&T, I still think that that's a good one. I'm going to go down. Micron, MU, big winner yesterday. I think it was up like 5-6%. It created a gap between 50 and 52. It's hitting up against that 200-day. Now, if you break that 200-day and you close today for some reason above 55, I can't imagine that you do, but at some point in time, if you close above that 200-day, if you have TrendSpider, put this alert on for you. If you break above that 200-day, maybe I'll just set an alert, create an alert at this line. Sensitivity, we're going to put it within 10 cents. We're not going to use the extended hours, but we'll do that. SMA, your note, we're going to say above 200. And expiration, we're going to say 18 days past, trigger once, create alert. Why can't I create I have to say breakthrough. I'll say touch. If it touches within 10 cents of that 200-day line, create an alert. Boom. You know what happens now? When it gets to that 200-day, within 10 cents of that 200-day, I get a text. Another benefit of TrendSpider. I don't have to sit here and watch charts. But if it gets close to that 200-day, I think you're going to fill this gap up here at 61. 60. This was just back in November. It's not like that's a crazy thought. Now, their earnings they were talking about the chip and the chip glut. They were bad. So you have to worry about it bouncing off that 200-day. But if you break above that 200-day, I think you got some momentum here for at least a 10% move. UNH yesterday got beaten up. It's close to $500. It is below $500, $493. This is, once go back and look here. You're coming up on earnings. I can't imagine that earnings are going to be bad. Earnings might be brought down, but take a look at this. We'll go to a weekly. Take a look at this. You're breaking the 50-day. Last time you broke the 50-day on this one, you moved up from 473 up to close to 550. So that was just back in June. So I think you have an opportunity to get in here on UNH. I will continue to watch this one. I want to see where the trigger is. Outside the Bollinger Band, I'm not saying buy this one today. The RSI is at 26. I can't imagine that this one goes down to 450s, but you can see back here, 460 could be in play. Let's bring this volume shelf back here, and we'll see. See, everybody's bought in down here at the 470s. They've already sold. You've broken through the volume gap here. So be careful. I don't know that there's necessarily a floor on this one. You're trading well below the Bollinger Bands. I don't know the news on this one, but I saw it yesterday. It was crazy beaten up. GLD, which is the S&P Gold Trust, there's some strength in gold. And there was this a guy I saw on YouTube this morning, Stock Market Mentor. Dude charges like, $50 a month for his alerts. This is stuff I give you guys for free. I don't charge for this stuff. I don't want to charge for this stuff because you know what? Rule number 1, don't listen to a douche on the internet. Don't make your buys. Rule number 2, don't listen to Jim Cramer. But he did bring up GDXJ. But it's the same thing. It's gold. It's just a different gold ETF. Gold has been strong. And Dr. Tom is right. Gold has been strong since November. GLD, 155 was the buy-in. And you're at 170 right now. Huge gaps all the way around it. What this guy said was GDXJ, which is Van Eck, it's the gold miners. It's less gappy. And so he liked it because it does have this ascending triangle in it. You're trading above here. He thinks that you could go to 40. I don't know where he's necessarily getting his stuff unless he's looking at this gap back here at 38 to 40, which he could be. He could be. See, there's the gap right there. I just hit it. So it's below the 200-day there. I'm not sure that it draws that magnet there, but you're trading at 37 right now. It kind of ran up yesterday. It does have this support level here at about 34. He was telling, tight stop loss at about 10%. So, but I wanted to bring up gold since it is strong. One that I saw yesterday that really moved was Mara, our lovely Mara. This is one that we had a trigger at 390, and it still got you in. It just hasn't moved. And it went all the way down to 320. Even though that 390 was in there, It went all the way down to 320. You're at 394 right now. And you're above the 9-day, you're above the 21-day. This is crypto. The RSI is at 50. When we go over to Active Trader Pro, Mara today, I'm waiting for it to pull up, is at 396. It closed yesterday at 422. 396 is where is at today. And it's just in the last like 10 minutes. It's just, well, I want to say since 7 o'clock, it's been on a slide. There's no reason to buy it right now. I wanted to bring this up because I like this one, with crypto. I think you can buy it. It's actually got physical money that it makes. So unlike crypto, this one mines crypto, but I like it a little bit better than crypto. But you could make money. Tesla, big move yesterday. I think it was 4, 5, 6%. Tesla is, according to Mark Newton from Fundstrat, and I'm a big fan of Tom Lee, not the drummer, but from Fundstrat. He has been a bull through this entire bear market. Now, nothing that he says, he was right throughout the pandemic, but he's just a permanent bull, and that's what it kind of looks like. He's a permanent bull. Kind of like, Warren Buffett. I saw a great interview with him where he was like, hey, I just invest in America, and you've got 77 years. I think he said 3 77-year occurrences within the U.S. where you just had constant growth. And it's because the U.S. is set up in that way to actually succeed. And so he said, I'm betting in the U.S. And Mark Newton from Fundstrat, kind of the same thing. He's a technician. So unlike Tom Lee, who's a economist, Mark Newton is a technician who looks at charts. Mark Newton said Tesla is broken right now. He thinks that the 100 level could be a good technical level to buy. The weekly charts are showing oversold right now, but more time is needed, maybe at the end of the month. And he said, do not buy it before earnings. But the end of the month, January 25th, if you hit the 100 level prior to that, I think you could probably start putting some money in. Again, this is in the Daily Stock Picks core portfolio. I have it still in there because I do think that it's a stock that you could hold. I got out of it for tax purposes. I got out of it. I think I sold it like 115, somewhere in that neighborhood. I didn't manage this one very well at all. If I had managed it very well, I'll show you kind of on the chart here, on the algorithm that I have, I would have sold it 220 because there was a death cross here of the 50-day under the 200-day, and you were trading at the 213 level. I held on for $100 of per share. I don't know how many shares I had. I had quite a bit. I want to say 100 or so. But yeah, I held on for $100 per share. Not smart on my part. Not good. You haven't had a winner since October. In this one, you've had constant losers. The algorithm loses you 24%. Buying and holding over 1,000 candles loses you 60%. Your average win, you only win 32% of the time, but your average win is 12%. I think that if this earnings comes up and Elon announces a new CEO of Twitter or announces something crazy like the Cybertruck is ready for production, blah, 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 I think you're seeing this one move back up to the 150s. So you can see the volume. The volume shelves here, if you just pull this to its recent highs back in September, there's a significant volume shelf that's created down here between 105 and 129. Up above, you've still got a significant volume shelf around 180 to 189. I don't know that necessarily plays into it. The Bollinger Bands are still super big. You can see the volume increase well over average right now, but it's oversold. It's broken. I wouldn't kind of get into this one. There were some big moves in the streamers yesterday. Netflix way up at 307. It's covering this gap. It's going to cover the gap to 314. The next gap that it covers is to 345. I'd like this one closer to $300 than at 308. I'd probably just hold on to it at 308. I wouldn't sell it, but the RSI is up at 61. So it's a little high. Their earnings are coming up. You don't know what those earnings are going to be. Maybe they're going to announce that they just haven't been able to sell the ad tier as well as they thought. They haven't grown it. They might announce a crackdown on passwords, which would make this thing soar. You just don't know. But Netflix, big move. It's still in that upward trend. The algorithm had you in at 290 and you're at 308. So you've got some pretty good percentage if you got in with the algorithm. Again, if you want your access to the algorithm, just sign up for TrendSpider. I'll give it to you. It's not a big deal. Paramount Global, PARA. This is one that moved up big yesterday. 1681 was the buy in the algorithm. And this is a Farmer Jim on CNBC. He's been pounding the table on this one. This is great. I think it's $20 stock in a healthy streaming market. Yellowstone, I'm not a big fan. I think it jumped the shark in season 2. I watched the first season. The second season was pretty much the same thing. So I was like, great scenery. Characters, I was like, But yeah, Paramount Global moved. Wells Fargo analyst Mike Mayo said that Bank of America is his top pick for the next couple of years, and he believes it will double. It will surge 50% over the next couple of years. 50% over a couple of years, by the way. That ain't no joke. If you're going up from 30 to 50 or 45 in the next couple of years, that ain't no joke if you play that one. That's great. That's a great move in a huge company. The RSI is right now at 58. I bought Wells Fargo at about the same time this was trading at 31. Wells Fargo is up 5%. I'm up on that one. I think you can buy into these banks with the rising rates. I think Wells Fargo, I think Bank of America, shitty bank that we always say from South Park. This was at 44. It's, the algorithm said buy at 44. You're at 46 now. I think any of those. This one, it's bumping up against that 200-day. And you can see when it bumps up against that 200-day, it just doesn't like it. Just kind of loses it. Bank earnings are coming up next week, so we should be able to hear some pretty good stuff. There was a subscriber yesterday, by the way, who messaged me that he had signed up for Fidelity. Now, we don't have a great process for this, but I did message my Fidelity guy. My Fidelity guy is offering, I think it's $100. $2,500 is the minimum funding that you can put in for the bank account, for an account, I should say, brokerage, IRA, Roth IRA, HSA, whatever you want over Fidelity. They've got all the accounts that you can just transfer over to. $2,500 is the minimum. He'll give you $100. I get something out of it. Essentially what he says is send the email and phone number to me. I'll send it over to Stuart at Fidelity. The person yesterday, we got told by Stuart yesterday that we're getting gift cards in the mail. So we're not even getting it funded, but we're getting gift cards in the mail. So if you want to do it, I just wanted to make sure that you guys knew that. There's two things that I use on this podcast. It's TrendSpider, which you can sign up for free. Use the link in the description. Right now it's $468. I've been having some discussion with people who are upset that they didn't get it at $300. Well, you should have you bought it at $300 when I told you. There's, again, I'm not selling courses. I'm not selling a bunch of stuff. But the two things that you guys see me use all the time, it's TrendSpider and Active Trader Pro. Those are, if you want to trade, if you want to understand stocks, Fidelity even has the best educational system. I mean, shit, Fidelity has so much stuff. Plus, look at the bond rates they're giving you access to by just buying. 4.83. God, I'm going to do that after this, by the way. I think I'm going to take probably six figures and throw it over there. Just because I'm not going to trade six figures. Who am I thinking? But yeah, but Fidelity's great. TrendSpider is great. Those are the two things. So I wanted to bring that up. My favorite groundskeeper, Bill Murray, wants me to look at WAL. This is Western Alliance Bancorp. I think Bill has brought this up before. It's crossed up here at 58.20. You're at 59. The only thing I know, let's look at their FinViz. WAL. Western Alliance Bancorp. So their PE is 6. Their dividend is 2.37. 1 year, they're down 44%. Performance year to date, they're up 1.88. So it's with the banking system. You're 52% below your 52-week high of 124. You're 8% above your 52-week low of 54.86, which is right about where the algorithm said. Yeah, 58 was where the algorithm said. The latest monkey was JP Morgan, neutral, $85 price target, which is crazy. Insider Monkey, 12 dividend stocks that are down 30% year to date. Let's see about insider transaction. The last one is a sale from a director at $78.36. So I would assume that 78, just based on last year's sales and the most recent sales, 70 is where they want this stock to be. It's kind of where I would think, but there's not a whole lot of insider sales, buying, not a whole. The last big one was in March of 2008, and that was almost $2 million bucks. But from a technical standpoint, I see it as a downward trend. You're down. Look at these two trend lines from FinViz. Again, if you don't have TrendSpider, just look at FinViz. Look at the weekly. It'll draw trend lines for you if it identifies them. But look at the weekly. I mean, it's down half of it. Look at the monthly. I would read up about why they're down. These are regional bank. Western Alliance Bancorp adds new members to its board of directors. Bank Analysts Association. There's not a lot of news on this one. I mean, you can read about the Q3 earnings back in October and their estimates. When's their earnings coming up? It's coming up next week with all the January 26th, so in 2 weeks with all of the rest of the banks. What worries me technically is that look at that big move that you've got in the MACD right up to the oscillator. The last time it capped out, you moved up a little bit, and you moved up just over that 200-day. That 200-day is right now at 68. That'd be a big move for this one. Does have a gap up here. Let's pull this over here to see. Are most people? Yeah. See, here's where you have to worry about it. Not a lot of people bought up here. Essentially, when it was up here, nobody was really buying. Or if they did buy, they sold, because you don't see a lot of volume up there. You see most of the volume down here. And this big move down here, 56, that just means that, hey, a lot of people thought it bottomed out. There's a lot of people buying here, probably with the MACD kind of crossing up on the daily. We can go to a daily and just look. A lot of people, technicians and stuff, look at the daily. Yeah, you can see the daily. If we pull this back a little bit to its high right there, you can see right here, I mean, probably again to that 200-day right at the on the 4-hour chart, 65 to 66. It's where a lot of people are holding. So, but just be careful, because look at that long term. Look at this long-term chart. This is a regional bank that has been in free fall since November 2021. And if we take we're going to go through, let's start here. We'll start March 2022, and we'll touch at least 3 points. There we go. And if we just move and touch 3 points on the top end, I'm going to touch that one. Then you're still in the 50% down below there. So I think you could go up to, again, all points are pointing towards 69 as being a top, but you're at 59.38. So I would think if you move 5% on this one, I think you take your profits, because again, if this trend is right, while you're moving upward in this little upward trajectory here, you're still in a bear market. And don't fight the trend. Look at the 200-day. Look at the 50-day. The only ones that are moving are the 9-day and the 21-day. That's it. So I wouldn't assume that this one's all of a sudden going to turn around. Now, if you're holding long term and you look at a weekly, the 200-day still moving up. The 50 days coming down. If you have that death cross of the 50-day under the 200-day, then you're probably looking at the 40s again. So, again, financials just haven't done well. So, WAL, I think if you're in it, Bill, I'd stay in it for a little bit longer. But if you're out of it and you want to get into it, I would probably put a fairly tight stop loss just based on it's in a bear market. That 200 days just moving. There's no reason to think that that's going to move up. One that I noticed yesterday too was Coinbase, and this was with Mara. Coinbase is, again, you kind of think of this one, hey, it's in a bear market. Absolutely 100% bear market. But it moved up. Today it's moving down. We had this the cross up here at 35.19. It hasn't moved much on the MACD. It's just kind of fluttered while it's moved down. So it's not a great one, but I think you can expect a bounce back. See how the Bollinger Bands are kind of cinching up here, and it traded outside the Bollinger Bands, but then it pulled it back in. So you're going to see them cinch up, I think. This is not one that I'm recommending right now. It's just one that I noticed yesterday, and I wanted to look at it. I am hearing some conversations on Twitter about Mullen. And I want to be careful with this one because I don't think that the algorithm does you any benefit in this one. But Mullen, I'm hearing some mutters about. So let's take, they're talking about something midday today or at some point in time during the day, moving this stock. This stock is absolutely worthless. I want that up front. You do not hold this stock. It has failed to meet NASDAQ requirements. It's at 35 cents. It opened up at 33 cents. So you've moved a good amount. I mean, listen, when you're talking cents and 33 cents and you're moving 2 cents, that's almost 10%. 3 cents is going to be your 10 cent, your 10%. So there's talk of this moving. What I want you to be careful of is realize this was a full dollar just a few months ago. Let's go back to Safari. Here's where we're at. You're making lower lows. And remember I said don't fight the trend. You're right up against this 200-day. There might be big news that comes by at 39 cents and pops up there. I would say if you're going to trade this one, trade it on very short time frames. Scalp it. Don't think that you're going to make 5,000% in this one. Get out quickly. That would be my guidance on that one. Let's look at some scans. McDonald's crossed up, and I think this is a secondary cross up if I'm not mistaken. It's still running. The algorithm's still thinking. I think it's on McDonald's time. It's not a secondary cross up. You've had recent kind of lows on this one. 264.39. You're at 262 is where you're trading. This is one that I honestly I think you could just buy and hold. It's not broken. It's 200-day. It's in that direction where it may. You can see the last time it broke its 200-day at 251, it traded all the way down to 237, but then shot up to 278. And that was right before earnings. We're kind of going through that same pattern. The problem is going to be, what will the earnings come out with? Are they going to reduce their guidance? And that's the danger that you have. If you trade into earnings and they all of a sudden say, hey, we've got a ton of inflation, we're going to make less money, well, shit, you're going to lose a lot of money. You got this gap that's starting to be filled down here. 259 is the gap. I think if you get closer to 259, 260, I think you could pull the trigger. Don't put 100% in. If you want $1,000 in there, put $100 in. You got free trades. If you don't have free trades, go to Fidelity. You got free trades. But McDonald's had that cross up. 264 is the buy-in. I wouldn't necessarily trust that 264. Your RSI is on the downturn at 41. 41's in no man's land, and you can see kind of the MACD's just meandering down. It's below the oscillator. It's not making big moves, but I think McDonald's is a quality stock. I think they're a quality company. I think they are a little bit expensive. See, the PE is 33. They have a 2.3% dividend. Year to date, they're kind of flat, but you're only 5 days in. For 1 year, you're down 2%. So remember, the S&P was down, I think, 8, 9%, 12% last year. Somewhere in that neighborhood, maybe closer to 17. I don't know. But let's look at SPY. So for 1 year, SPY was down 19%. So McDonald's being down 1.56% in 1 year is freaking incredible. So here's the daily. When you go back, again, it's a good stock. Whether you like the fast food or not, I freaking love fast food. Oh God, if it were healthy, I'd eat fast food every day. Another one. This is a stock that has done horribly. Walgreen Boots had a cross up. And the reason that it had a cross up is it just tanked yesterday. I mean, you can see that candle. This candle here in the morning, it's down a period of 1.56%, and you're not even 30 minutes into the trading day. And you've already moved 2% in a candle. That's crazy. It's broken its 200-day. It had this cross up. I would say hold on. Don't necessarily buy this. There is there's got to be some news on this one. Walgreen Boots resumed. Beats on earnings, stock slides on opioid settlement. Yeah, they got an opioid settlement. So their earnings came out. It hasn't done very well. It's got a new CEO. I like the management team in this one. I think you could probably get into this one. You can see the 200 days just kind of moving straight ahead. It started to you're coming off a 23% gain in this one. You're down at 37. It was just trading at 40. So another one that I do like, AVGO. This is Broadcom. It's expensive. AVGO is expensive. I will tell you that. It's a secondary cross up. You're currently in this run at 436 from October. You're at 554. There are gaps down below here. Your Bollinger Bands are cinching up. So I do think that you're going to make a move. And the MACD is crossing up. You can see it's above its oscillator line and it's crossing up. The question is, where's it going to go? You've already had your earnings. You've passed your ex-dividend date. Your next earnings are coming up on March 2nd, so it's no time soon. If we go to a longer-term chart of this, I do think that you have some opportunity because look at this one. The last time that you touched the 200-day was COVID, and you just continued to go up there. I think you could see 620 in this one in a good market, but you are overbought. The RSI is at 57. And this is a weekly. You go down to a daily, and it's probably even more oversold. Well, it's at 55. So it's the same thing. It's just oversold. But you got that 50-day crossing up on the 200-day on the daily. It's a golden cross. So there's your crosses. There's your stuff. I'll be on YouTube for a little bit more. But if you have any questions, thanks for the feedback, guys. If you made it this far, rate the show. Up on wherever you're listening, just hit 5 stars. If you made it this far, you like me. You really, really like me. But yeah, not too much today. That jobs report is coming out Friday. We saw from ADP today, we could get beaten down. So I've got a bunch of cash on the sidelines. I'm probably going to start putting that to work here in the next couple of days. I'll let you know exactly what I do. I do like Bank of America. I do like UNH. I do like Broadcom, even though it's a little bit expensive. Daniel wanted me to go over RMED. RMED. This is it's definitely a retail trader stock. This is RA Medical Systems. Let's look at RMED. They are healthcare devices. They're not making money. This is not one that you want to get into for a long-term perspective. Unless you're Dr. Tom and you understand this stuff. A medical device company develops, manufactures, and markets excimer lasers for use in treatment of vascular immune-mediated inflammatory diseases. I know I've gone over this one before. RMED, we had the algorithm buy-in at $5. It's at $6.32. You've had crazy moves in this. The algorithm, just so you know, loses you 95%. The buy and hold loses you 97%. Your average win is 18% on this one, but you only win 18% of the time. There are so many better places to put your money than to risk it here. You know what? Go to Vegas. It's about what you're getting here. Just go to Vegas, put it on blackjack. It's a lot easier. It's a lot simpler because that's where I think you're going. Now, from a technical standpoint, you moved above your 200-day. You haven't been above your 200-day since you were at $17 per share. So I don't think you're going back there. There's nothing that tells me from the monetary standpoint of this, from the monkey, the analysts that are moving this. Year to date, you're up 15%. 1 year, you're down 91%. Doesn't mean that this is a great company. It's a short squeeze. It's essentially what I'm saying is that it's a short squeeze. Let's go over to Active Trader Pro because they tell me the percentage that's shorted. By the way, 11% of Mullen is shorted. RMED, 18% is shorted. And look, you're losing. Yeah. Go to Vegas. It's a better opportunity for you. It's a micro cap. So over 10 days, you've traded 338,000 shares. Over 90 days, which is a longer term, 1.5 million shares. It could get caught up again in retail trading. That 1.5 million shares traded, that's retail trading. The 338 over the 10 days, that's normal trading. So if we go back here and we look at kind of the volume, you look at that volume right there. And then it flattens out. There's no volume in this. So you could very well get caught in this one and lose all your money. I'd say stay out of it. So Daniel, there is your boomer. That's the Jim Cramer take on this one. Oh, I should show you on the chart, by the way. Here. So that blue line right there, that's the volume. And you can see where it runs up. It's just volume. It's volume that's running it up. That's all it is. It's short squeeze. There's no news. There's no nothing. These guys are losing $4.36 per share. It's split, and the reason it's split here is because it's a reverse split, 1.5 shares. So they wanted to boost up their price. That's all they did, boost up their stock share price. But it doesn't change the value of it. It just changes that they wanted to get above $1, I think, is what they probably did. So you got gaps down here. It's not worth it. Hopefully I talked you out of that one. Tune in tomorrow for more boomer analysis and more hatred on Cramer. So thanks, you guys. And again, remember, TrendSpider's on sale for how long? Let me see. TrendSpider is on sale for 3 more days. So if you're pissed that you didn't get in at 320, you're going to even be more pissed when you can't get in at 468. Because I think this is the last time. It's the last sale. I do have 25% off with the code DSP25. But that once they're 45%, 40% sales up, you don't have anything else. 25% is all you're going to get. So you got 3 more days to do it. Any questions, hit me up on the socials. Let me know how I can help you. Do not pay for somebody's stock triggers because, I'd rather see you pay for TrendSpider and actually learn how to trade. Okay, take care. Okay, export song to disk. By the way, Google at 87. Phew. Devin's almost up over 60. Okay, Brandon, here's your explanation of HSA. So there's two ways that an HSA works. And I'll talk about it from an employer standpoint. So an employer will take the money out and they will put it into a HSA holder. And that HSA holder is Health Assure, I think is one. There's other ones. They charge you fees and they limit the funds that you can trade in. And they also give you a debit card that limits where you can spend. So, for instance, you go to Walmart and you buy some broccoli and a prescription. You got to use your HSA card. Will go through for the prescription, but it will ding you back on the broccoli, and it will say your card isn't approved for that. You're paying for that service. In contrast, you have other places like Fidelity. Oh, and I should say, like Health Equity. You can only invest in funds, and they're hand-picked funds, and they're to quote unquote protect you from not losing your money. And so you do have to have, by the way, a high deductible plan. Your plan that you choose for healthcare needs to be, and you can call your healthcare company and say, is this plan HSA eligible? Not every plan is HSA eligible. So if you have healthcare that is not HSA eligible, maybe it's HRA, it's a restricted account, RA available. But HRA, HSA are different. HRA is, I think it's, you have to use it within that calendar year or else the company gets to keep the money if you don't use it. For HSA, there's no statute of limitations that you can use. Here is my take on HSA, and I found this out pretty quickly when I saw fees coming out of my HSA from my employer. So I went to Fidelity and I said, hey, do you guys have an HSA? And Stuart or somebody, maybe it was Ryan at the time, was my financial advisor, said, yeah, we got an HSA. Roll your money in. I said, okay, what are the restrictions? None. Well, do you give me a debit card? Yep. Well, is your debit card restricted? Nope. You can use it for whatever you want. So you manage your HSA. So say you go to the same store with a Fidelity HSA and you buy broccoli and your prescription. Well, if you use the card, the HSA card, to buy both, and you get audited, you will have to pay taxes on the broccoli. And so it's a little bit more self-managed. But you can buy Apple stock, you can buy VOO, you can buy whatever you want in your HSA. I had my HSA maxed out on ARC funds for like 2 years. Here's the other benefit that an HSA provides. Because there's no statute of limitations. For instance, last year I went for a screen cancer screening, and the doctor charged me $150 for literally 5 minutes. Yeah, you're good. Because I spent that $150, I didn't use the debit card and I didn't use the HSA. And you might be saying, well, why? It's tax-free. You should use that money. Well, here's what it is. I will keep that money in the HSA invested in Apple stock, in ARC funds, in VOO, in whatever I've got it invested. And 20 years from now, I'll use that receipt to take out the $150 that I actually put in tax-free, because all of the HSA is tax-free. So you don't even pay capital gains on it. And there's some rules around that, like after 59 or something, you can use it to live on. But your medical expenses will be a huge, huge thing. So you want to, essentially, I learned this from, one of those fire communities, and they were like, yeah, don't take out your HSA, let it grow for years. Even if you put in like $3,000 when you're 21, say you got $3,000, put it into your HSA instead of your 401k, and just let it sit there, because it's better than a 401k. Because when you take out a 401k, you basically pay income taxes on it. When you take out when you're 65 and you take out your HSA, you don't have to pay income taxes on it. So it's even better. But do your research. Again, I'm not a tax person, and that's just an overview. There's a lot more intricacies to it. You can call up Fidelity and ask them their guidance on it. You've got your own financial advisors at Fidelity that can give you some tax advice. They don't give you a lot of tax advice. You have to do it on your own. But HSA is, one of the top, if not the top, accounts that you can have. So I like it. And again, it's within Fidelity, so I've got it in my Fidelity account. Yeah, you're welcome. Just Brittany, bitch, remember when you open up that Fidelity account, shoot me up that email, and I'll get you something, and me something. Oh, it wasn't compounding. I don't know if I'm doing anything trading wise today. I don't like the charts. Although I tell you, where's you, Vixie? Let's go over here. This is TQQQ. Remember how I said SQQs? I think your 60's coming into play. Yeah, there's a reason I recommend. I'm in the places where I'm at, like Fidelity and TrendSpider and stuff like that. And God, I went to that guy's YouTube channel, just sticks in my mind. He's charging $7 for a week of freaking alerts. I don't like that. And the guy's got, thousands of subscribers. I ain't got shit. Maybe I should start a course and then I'll get shit. I gotta go look at his thing. Tesla's at 108. That's gonna hit 100 soon. SOXS. Russian Christmas. What was the one I was going to look up? Mara. I wanted to see Mara. This looks interesting. What was the one from earlier this week? Netflix. Let's look at Netflix and Paramount. Nothing stopping Netflix. God, this is just a crazy. James, I mocked you about something this morning. I don't know what. Look at that. Look at that run on Netflix, though. 350 is the gap, by the way. See, it's covering this gap. Oh, you know what I wanted to look at? QCLN. It was up 3% in pre-market and then got tanked. Yeah, see, it doesn't trade. There's not a ton of volume on it. The volume's not always great on this one. You just buy in. But here, QCLN, I think we had a cross up on this one. Yeah, it's just been beaten down, 47.77, and you're 46.12. And look at it. I mean, look at where that MACD is, and it's crossing up. I was beating you up on Boyle. That's what I was beating you up on. Here, let's go back to. Should I pull up the Facebook group, James? Wow, 12%. So here's what I did, James. I'll show you. I think I've still got it up on the weekly. Yeah. Here's Boyle, or this is KOLD. And this is why I'm not touching either one right now, is because if you look at this channel that I drew, I took that middle line, the bottom line, and I touched 3 points, okay? I made sure that I touched at least 3 points. And I took that top line, and I made sure that I touched at least 3 points. And so that's the direction that Boyle is coming in. This is KOLD. You're up at a high point here. You could break through, and it's likely that you're going to break through because you do have, just kind of moving towards that 200-day. You're not getting to $492 on the 200-day, but you could break this $38 on the 50-day, and it's moving in that direction. The Bollinger Bands are cinching up, so it could move up significantly higher. But I'm not touching it because the RSI is at 54. In contrast, you go over to Boyle and you look at the weekly on this one. And remember, too, I said that both of these stocks are decaying assets. Both of them are decaying assets. So they will never be in an upward trajectory long term. And look at that. You've still got down to, $3 on this one from 12 if you're just looking at those channels. And the only reason it was up this high was because it was just, this is the invasion of Ukraine, and this is when Nord Stream got shut down. Dude, take a tax loss on it, pull your capital out and throw it into something else. I'm telling you, Boyle's going down to $2. Oxy's up above 60 again. It's up 1.339%. Exxon's up at 107. I might buy more Exxon. I sold a bunch of Exxon. I think I can buy back into Exxon. What's the lesson there? Don't go on a fucking cruise. I'm kidding. Save. I wasn't even showing you this. See the channel there? That's Boyle. That's Boyle. And this right here on the right-hand side, you're not even halfway to this channel at $12. That channel goes all the way down to $4 if it were trading at the bottom of the channel today, like it has in the past. And the 2 times that you went out of this is the invasion of Ukraine right here. This is when he shut down Nord Stream. And then you're just crawling down. So I don't think there's anything good in Boyle right now. I'm not touching either one. We're going to go to, you know what? Let's go to ChatGPT. I'm going to say, try ChatGPT, checking if the site is secure, proceeding. Oh, ChatGPT is at capacity right now? Son of a bitch. Wait, am I logged in? Log in. Do not tell me ChatGPT is out. This is a free research preview. Okay. I know all this. Okay, new chat. Yeah. I'm using ChatGPT. Let's see. Are some keywords podcast about stocks? I'm going to copy and paste that into today's title. I love ChatGPT. That's the shit that you can do with it. I'm going to paste this into my create an episode. Podcast 1/5/10/17 a.m. upload. I have not. Put in Peacoat. Anybody following the Speaker of the House drama? This is what you get when you elect extreme candidates. I'm just not a fan. Not a fan whatsoever. And I don't care if it's left, right. I don't care, whatever. It's people who aren't willing to work with each other. And Kevin McCarthy, make no mistake about it, is not a good Speaker of the House. He's going to be a mess. But the rest of the mess is what's really going to... The problem is he doesn't have his party under control. Say what you want about Nancy Pelosi. She had her party under control. She got people to work together, even though they didn't want to. Oh boy. I gotta title this one. Let me see. Colonization doesn't work either. You crazy. Um, um, I actually don't have a lot of notes for today. So we're going to put in. Larry, you're awesome. Larry, don't worry about freaking. I'm more happy that you made money than I'm worried about your tip. High five, man. Pew. Great job. I like when people make money. And fuck. You must have been the 1 month crowd for Boyle, because I don't know who's made money with this one in a long time, Larry. That's a 1 month, 30-minute chart. I'm at fault. I mean, listen, I'm at fault with as much as anyone else, but let me finish up this title thing. Copy. We'll put this is Mike Mayo's top pick. He's an analyst from Wells Fargo. Do 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 do. Oh, I don't beat myself up over it. I'm gonna be wrong. I'm gonna be wrong as the point. I'm probably more wrong than I am right on stock trades. Oh, look at this. CNBC, if you guys are tuned in, Cheniere Energy CEO on natural gas demand. They're doing an energy. Brian Sullivan, who I really, really like. Guy just knows energy. He's a reporter, but damn, Larry, nice job. Good job in getting out, I should say. We're gonna put ADP jobs report, coin. I want to watch Mullen. I also have to go to and pull out my episodes. There we go. Copy. Notes from today. Under $500. I like UNH, by the way. Larry, I'm right there with you. Mental stops don't work for me because I tend to, and it's part of the reason. And it's funny. I'm gonna publish this episode. But it's part of the reason I developed the algorithm, and me and my buddy Steve developed it. And the reason we like TrendSpider is not just because the algorithm is there and it provides us, NovaCure, NVCR. Wow, that one's a good one. It takes emotion out of your trade. And the algorithm tells me emotion shouldn't be there. And so if I see something, let me publish this real quick. And I'll go back to, like for instance, if I go to Tesla, and my problem with Tesla is that I'm emotionally tied to it. I have the car. I like Elon Musk. Hey, Brandon. Hey, have a good sleep. I'm emotionally tied to it. Now, if I wasn't emotionally tied to it, I could have seen this drop coming here in TrendSpider. And the emotions out of it. That death cross right there of that 50-day crossing under should have been a clue to me that, hey, we're in for a downturn and maybe I want to think about taking some profits. Because anytime this stock has crossed under the 200-day, you haven't had huge runs down, but you've gone from 300 to 200, 300 down to 280, and that's just last year. If we go to a weekly kind of chart, you can see we just haven't crossed that 200-day at all. Even COVID didn't bring it down to the 200-day. So that 200-day cross was at 150. I should have absolutely been able to see that, hey, that once we crossed that 150 mark, I should have sold. And you're down at 107. You got no support here whatsoever. And so when they're saying don't buy it, I'm kind of in there. Don't buy it. So, Larry, I'm right there with you. Mental stops don't work whatsoever. And that's why, again, I like TrendSpider just because it takes me out of that emotional setting. So I'm going to push you back over to Active Trader Pro. The one that I do want to watch is Mullen. Because I did see, so here, and I didn't say this I'm going to say this since I'm now an hour in and nobody's listening other than you guys, you 12 that are kind of here every morning. But I read that they're going to announce some type of funding. And remember, when I was going over this morning, we were at about 30 cents. Let's go to a 5-minute. Let's go today because I was talking about it right at open. Yeah, we were at 34 cents. You're at 36 cents now. Could have made almost 10% in what? 20 minutes, 30 minutes, somewhere around there. But I'm hearing there's news on this front. So, I should. Update. Oh. Let's see. So it's a EV stock, and Justin, it is worthless, completely worthless. It is not a company that you want to put money into. It is simply a company that is pumping and dumping. You don't want to be at all involved in it. But I will tell you that there's some news out there that this is going to let me see if this works. I got to see if this works real quick. And you know I can't do more than one thing. Oh, no, that's not what I want. Discard. I can't do. Oh, no. Episodes. Oh, we'll just copy the link. Let me see if this works. Nope. Update episode, Twitter. There we go. Yeah, but you can trade it. I mean, it's at 36 cents right now. If the news isn't as good, blah, blah, you could get killed on it. But I thought it was interesting enough that I would bring it up. And what I want to do now, I'm trying to post this episode on Twitter because I do get a lot of people on Twitter who don't necessarily have alerts on. But they go and listen when I post. I like UNH under 500, by the way. It might be time to buy it today because I do think that one might turn quickly. I don't get news fast. You know what I do? Honest to God, I scroll Twitter. I think Twitter's the best quick news if you're involved with FinTwit people. I think that's the best way to do it. But I typically will sit in front of my TV at night and look at. I created a Google finance list of all the stocks that I like, and then I'll go to here. I'm gonna take this and I'm gonna X. No. X cut, and we're going to Penny, there ain't no way I can put up with your bullshit right now. I have Tesla, BLPH, SQQQ, SOXL, ABVC. Apple. No, that's it. Okay, we're going to put that. Tweet. And then we're going to tweet. Hey. Sorry, I'm kind of doing this shit off the... And I know these fucking dogs are going to say, hey, we got to go outside. I'm going to delete that. And we're going to put that in. And then I've just got to get rid of... Okay, and tweet. Okay, let me look at your... Yeah, let me pull up the chart. Let me just get out of... Some of the fidelity stuff I don't want you guys watching. But let's pull up the chart. Safari view. So here's what I'm a little bit worried about in UNH. And I'd probably like to wait for another candle. And that means 130. So today's candle, your low is 490.25. But I do think that you're going to move. I'm going to pull this back a little bit because I want a little bit longer term. And you can see, if you just pull it back to August, you don't even have volume support down here. You do have, if we just pull this over a little bit, this candle right here, where your low is 487, I think that puts you into a pretty good sign. It was right on the earnings of October 13th. And you're right before earnings here. So I don't want to say that, hey, it's impossible that, we can't go down further than that one. But I would say, let's look at a daily. The only problem is with UNH is it's expensive. And look, this is funny. This is the daily, and it does this on TrendSpider does this automatically. It's a ascending triangle. It's broken in on the downside. So if we pull this back, let's say we're going back to this gap. Let's just say, for shits and giggles, we're going back to that gap. There's nobody holding who purchased right before this gap, right before this gap up in earnings. There's nobody holding. and it was when it was trading above the 200 day. So it's less likely that we're going to that gap. But if you look at the volume shelves from that time, there is a pretty good volume shelf here at about 486. I think James is right. If we break through that, I would rather wait for this candle to finish and see where we're at. Let's go to Active Trader Pro so we can look at a live 5 minute. And look, Mullen's at 36.2 cents. UNH, if we look at a 5 minute, we're going to look at a 2 day. See, right now, even at 490 on a 5 minute, you don't have any confirmation. None. And the Bollinger Bands are cinching up. And if I had to guess, you're going further down. I don't know what pulled this up anyway. What prompted this? Is it just because it's freaking... Let's go over here. I don't think there was news unless they got it down. Morning brief. This will usually have it. Google. Story continues. Merck. I don't see UNH at all. Merck, JP Morgan, Intel, Meta. I guess because it mentioned healthcare. Let's close that down. Here's Motley Fool. Continue. And of course I have a fool. Oh, come on. Don't freeze on me. I guess it's just... I don't even see. You better not freaking go off now. Stop it. Stop it. This is just one of those Motley Fool. Hey, these are 10 stocks that'll make you money in 2023. Vertex Pharmaceuticals. Let's see what they say about AT&T, Fiverr, Enterprise, Berkshire. Doesn't even have freaking United Healthcare. The fuck is going on here? None of these articles bring up United Healthcare. It must just be that it's healthcare, that it's kind of FinViz is looking for. There it is, United Health Group. The A stock that can make you richer, as mentioned earlier. The far bigger opportunity for United Health has been healthcare services subsidiary Optum. Diverse segment which provides everything from healthcare software to prescription filling services has consistently grown at a faster pace. Yeah, UNH. It's at 490.25. What's Vector Vest? I hear about that all the time. Oh, they forecast, Larry? Let's see.
VectorVest is an investing service that gives you investing answers, not just data. Know what to buy, when to buy, and when to sell. With VectorVest, you get market timing guidance, so you know when markets are favorable to help you win more trades. Just look for the green indicators to know if market conditions are right. Strategically enter and exit the market, and stop riding the market roller coaster. Know exactly when to buy and when to sell to maximize profits. Find time-tested and proven
I see them
investments
advertised on
reach your goals and master the market.
CNBC all the time.
Slice and dice, or simply use our proprietary screeners that force rank the best investment right to the top.
Below 450.
Just answers to all your investing questions. Let VectorVest do the work, and you reap the rewards.
I'll pull up Costco, but
A simple approach to successful investing.
I think 450 is a good. I like VectorVest. Larry, you like that? You're a subscriber to it? That looked pretty good. I've heard good things about them. I just haven't used them. I think, again, I don't want to pinch pennies, and specifically on UNH, because pinching pennies, you miss out. Like last time it was at under 500. We missed that run all the way up to 550. You missed a 10% gain right there. So I don't want to pinch pennies. I also don't want to necessarily buy, when it's going down, like Larry says, to 460. But UNH and Costco, I'm adding these to tomorrow so I can look at them. I might put 10 grand into freaking UNH right now, to be honest with you, at 490. Yeah, here's the thing with Costco. I think there was a gap that I saw. And maybe it's in the daily. But I think if we're going back to the lows of the 2022, I keep thinking this is 2021. Look at that 430. And you have it flattening out right now. At 453, it might make sense to put like 10 grand into this. They just had their earnings. I can't imagine that something great comes about this one. Like look at, PE, forward PE of 20 in UNH. PE on this one's expensive. 28 forward PE. Performance 1 year, you're down 20%. I mean, remember, just because this was a $600 stock doesn't mean it's going back to 600. Your earnings per share this year is expected to grow by 16%. But if they do a membership increase, yeah, Larry, I totally agree with you. And that's why I say I don't want to pinch pennies on any of these because UNH is a really well-run company. We're not fucking changing healthcare in this country. Yeah, I'd agree with you. I'd totally agree with you. And that's why I'm thinking, fuck it, 490. You don't want to pinch pennies and just wait for it to go to 485 because it seems to have leveled out. The Bollinger Bands you want to wait until it's above that night here. Let's go back to, so here's the 5 minute. Let me look at the 1 minute. See, you're starting to get a movement up on the 1 minute, but the 5 minute still doesn't have. And again, this is usually when I'm in a day trader mode is. Yeah, see the 5 minute, see the Bollinger Bands are cinching up, but you're below the 9 day. So it doesn't indicate to me that we're going up. I might put a buy-in at 485, and if it doesn't hit today, so be it. I think that's a good buy. Let me just look. 52-week low is 445 in February of last year. Yeah, we're like Kudlow and Kramer. You're probably too young to remember Kudlow and Kramer, James. Kudlow is the douchebag who was in charge of finances for Trump. He was on CNBC. Super well-respected guy. Conservative, definitely conservative. Went to work for Trump. Came on CNBC and basically said, with COVID, there's nothing to worry about. It will never reach our shores. We're making sure of that. Next day, you have a blowout, like, thousands of cases. He comes on and says, we've got all of this under control. Like the following week comes out, we're shutting down the government. Yeah, he's a douchebag. He's a douchebag. He sold his soul out. He's now on Fox Business with a show, I think. Because let's be honest. Fox Business, you might as well shout out a window. I think I'm talking to more people now than Fox Business has. And it's 7 people. Let's just put it this way. I think the number one advertiser on Fox Business is catheters. For old people that can't pee. I should clip this at 2 hours. Clip that and do that as a short. Okay, I am putting in a buy for UNH. And I think this, let's go back to Safari. I'm going to try and use this. $487. I'm going to say 487. I'm going to use that candle and put in a buy at 487. Man, it wants me to put in. Let me do a calculator. No. Okay. 487. I put 10% in of what I want to put in there. What I want to put in is 5 figures, not 6 figures. Let's just put it that way. So it's a 4-figure purchase that I put in at 487. Got to be patient, man. I'm telling you, here's the thing. Again, with this algorithm, it's trading below that Bollinger Band. I don't trust it, but the RSI is at 25. That's why I went in with 10% of what I want to buy with it. And with that, I am out of here. I'm going to post that on the socials that I just put in 10% in UNH at 487. Hopefully it'll hit by the end of the day. And with that, I'm going to call my parents and let them know that I bought some. So I don't manage their money. My mom wants me to manage their money. My dad doesn't trust me. So yeah, I think there's a lot of buying opportunity. I would just be cautious. No. Okay, guys, I'm getting off. Dogs need me to go out. Just be cautious because I think we have more room down. I'll see you guys tomorrow.